Good afternoon, everyone. This is Wilmer, um, a full-time forex trader, and today I will be talking about candlestick patterns and the psychology behind it and how to attack it. So, but before doing it, we have to determine first what we can see on the chart that we are looking at, and we will be determining what is the market bias because we have really to take our orders um, inclined to the market bias because it's I think it's silly if you'll be doing a counter trade, and I will explain it to you what is the psychology behind of the counter trader. So if ever you want to do a counter trades, it takes more effort, and you need to watch it as the market will move down, and you have to take profit on the trend lines in line with our market bias, usually in the valid pivot area. So, before I will begin, I would like to remind everybody that forex trading is a high risk business without proper training, with market analysis and risk management, as well as trading psychology training. uh, I will not encourage you to do live forex trading. So, um, before you have to trade with your live account, it takes 6 months to 1 year, and even up to 2 years, because forex trading is a continuous learning. You will be educating yourself um, most of the whole of your career as a forex trader. So today I'll be sharing to you what I will understand with the market, and I hope that you will be learning something from it. What I'm going to talk today. All right. So I will pull up my chart right now. So let's try to do analysis with mm, NCD USD in daily. We will start to analyze the market in daily, and we have to mark the market bias so that we can attack the market properly. Okay, so in NCD USD QE, we can see that the market is trending up, right? It's uptrend. So it is clear that the market bias is bull market bias. It's bullish, right? So this is how we are going to determine that the market bias still is bullish. So first, we're going to mark like trend lines, support and resistance, so that we will know the market structures of the market that we are examining with. So, but in order to do this, we need to have a neutral state of mind. We should not be in stressful situation. We didn't have any quarrel with our wife or our siblings or our parents, so that your analysis with the market will be objective. All right, I'll be sharing my screen right now. Okay, let's begin on daily. So first, we are going to use 20 moving average to look for the market bias. 20 moving average. What can you see? Because moving average will act as a trend line, and it's a dynamic support and resistance. So it's clear that the market was not able to break the dynamic support. And until right now, it is still carried by the moving average. So that's one way of determining the market bias. So what we're going to do so that we can do the right timing, we have really to scrutinize, or we have to do like deliberative analysis so that you will understand the candlestick pattern and you will know how to attack the market properly, right? So we will begin it here. We will just focus on daily, and then we'll go to smaller time frame so that you will know how to attack it. Because the ideal way is when you are analyzing the your primary trend, which is daily, which is now it is an uptrend. So we will be looking our setup or our attack on H4. So let's begin marking the trend lines that I can see. But before that, we have to determine first the pivot, because we have um, three very important pivots. Number one, we are going to locate the basic pivot. All right. So I will begin from here. We'll go up to here. And it's very clear that the bias is bullish. On this side, the bias is bearish. You can see that the moving average was not able, or was not violated in this area. And in this area, the moving average, the price is staying on the upper portion of the market. But it is also helpful to determine the basic pivot. All right, then. This is daily. The market went down here. So we can see that this area is a pivot, right? In this area, the market went down, went up. There is a indecision candle, or we call as a star, or a doji. And then it moves down. So we will scrutinize in this area if in daily we can see that it was not being tested, right? So therefore, we can say that this is a basic pivot in daily perspective. But let's try to go down lower if what we can see in this location. Mm. Right now, you can see many pivots, right? So as the market went down from here, looking in for our time frame, we can see that the market went down and move up. So this area is a basic pivot in this location. So this is a basic pivot, and Once that pivot is tested, it's already a tested pivot. You can see it here. It was tested in the second time. And on the third time, it was tested, but the market was not, the bears were not able to move down the market in this area. So I can mark this one as basic. Let's mark it as B. And this one, T, tested pivot. And this one is B, pivot. But our rules will be looking for we'll be looking for we'll be looking for a an entry in accordance to our market bias, which we can say that the market bias is uptrend, right? So when the market was able to move to test this one, it will not become a valid pivot until it can break this swing low. So at that portion, we can say that this is already a valid pivot. To market went down, up, then went down. But I'm going to remove it. We are looking for, we will not take this profit, this entry, because 1, 2, 3, this is what, first bounce, second bounce, third, first bounce, second bounce, third bounce, because it will, how many pips? It's just 122 pips. So we are looking for a bigger pips movement, which certainly will be attacking the market right here. In H4 analysis, as it went down, because we'll be looking at this level. So we will scrutinize this level first. There are a lot of, as market went up, this area is you can see it here. This is probably basic, but this is the basic fiber, because as the market will move up, it becomes valid pivot. So this area is a valid pivot. So valid pivots will usually act as good support and resistance. So this is a good support to watch out. So it was able to break the swing high and then try to test it. So this is a basic pivot. You can see one movement. So I can see this is just a basic pivot in this location. But as the market move up, it swing down, trying to test this one. So this area here is still this is already a tested pivot. As the market moved down here, this become a tested pivot. Why it is a tested pivot? Because it is testing this swing low. But the market was not able to bring the market up, right? But in this location, the market was able to break this lower, testing, break it lower, then fade, and this area is a very strong, this is a valid pivot. So if that is a valid pivot, this is a valid pivot, we can draw a trend line from here. See that one? This is a valid pivot up to here. Here you can see many valid pivots, right? Going up here. So you can see that the valid pivot is well respected from here, going up here, up to here, up to here. Although in this location, it tries to break out, but it went back. So in this location, it become right, what? Changes to bearish bias. But the market were able to, the bulls were able to move the market up, as you can see. And you can see it here that this is a valid pivot, and you can see that this support is a very strong support because it was not touched, it was not tested. And if you're going to go right here, this is a congestion area. You can see this one, which we also consider as a good area for our support and resistance, which it is respected. But we can see it here that the market went a little bit, you know, moved down for a move down for move for it was not really able to crush down our bull strength. And we can see it here, although in daily time frame, we can understand that this area from here is a it's a balance area, but we can see it here that the market is, you can see that it's moving upward, and it's moving upward. All right. So we can determine the momentum by marking the swing high in relation to our basic pivot and the valid pivots. As well, the most important thing is the tested pivot to um, to gauge the momentum. As we can see it here, this is tested pivot, right? Able to break the swing high right here. This is a basic pivot, and it was able to break the swing high, and therefore we can say that this is the momentum right here up to here is, we can see it's not really very strong. Look at the gapping here and here. The swing high, you can measure the distance, 92 pips, 64 pips, and 62 pips. and then fake out and fail. All right, so that's the importance of the tested pivot, that we can determine the momentum of the market. As well, we can see also that the buying pressure as well. You can see it here that the buying pressure is from here. You can see gapping from here per bar, but as it tried to break the area, you can see a negative gap here, negative gap. How about here? But it becomes, the momentum right here becomes stronger. As it went up, you can see that the gap was closed. So meaning to say, the momentum right here is not really strong. And not only that, we can also check for the momentum with our EMA. As you can see it here, there is a gap, right? EMA gap, EMA gap. There is an EMA gap right here. But right here, the gap was changed. Big gaps, big gaps. So meaning to say, the momentum shift changes here. So it went up, went down, went up, went down. So as a whole, we can understand this market over here as balanced market, right? But in each balanced market, it has its own structure, and the bias went up here and it was not able to break this trend lines from here. Trend line, the bigger trend line was not broken right here. There was a little shift of the bias right here from here. What else? But we can see that the market is, you can see it's making higher low from here, higher low, higher low. So this area from here, this swing low, which is a valid support right now, was never tested. So we have a hint that the market is even not looking to the future history of the market. We can see it here that this movement is pointing with a breakout on the upside, right? You can see it here. If I'm going to mark this one, higher, 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 and you can see that they are 1, 2, 3, they're on equal distance right here, equal prices. But as the price was able to break this area, we can make a trend line right here, and it was not broken. So meaning to say that the market plus the EMA carry, we can see it here, that the EMA carry is moving upward. So in this location, we can therefore say that we expect for a breakout going on the upside. Let's go back to daily. Yeah, even in daily, we can see it here that the swing high, swing high, swing high, swing high is shifting upward, shifting upward, shifting upward. And the low here, the swing low here, swing low, which we can say in this location is our valid subpivot. This area holds, and we can see this as a double bottom, right? So in this area that we analyze, and we can see that the market is moving below the moving average and went up, moving below the moving average and went down. So as a whole, we can see this area as a congestion zone, right? This is a congestion zone, but we can see that the market is telling us that it's going upward. We can see it here that it's going upward, right? So I will remove all my drawings so that we can further investigate this location. So the market is really pointing upward in this location. So the market bias is upward. And if we are going to look in our Ichimoku analysis, it's become very complicated because in Ichimoku, when the 5 lines are kissing each other's, meaning to say the market is in range market structure or balanced market structure. But in Ichimoku, we can say that the Chico, the green one, has crossed the Tinken and Kijun. It crossed and it holds. So the Chico is on the upper portion. So it's above price and it's above price. So this is the first in Ichimoku analysis. If the Chico is up on the upper location of the price, or it's on the upper location of the Tinkan, this is the Tinkan, this is the Kijun, meaning to say the market bias is pointing upward. As the market moves here, try to test this area, because before not plotting the Ichimoku, we say that this area is a valid pivots, or so therefore this is a support location, a major support. And if we are going to draw the zone, that's the zone. So meaning to say from here going up to here, this is support. As the market went up, you can see that the Tenkan and the Kijun was never been violated. So this is one way to analyze market bias. So therefore, in daily, we can say that the market bias is bullish. And you can see that the Chiku is pointing upward. Right here, the Tinkan is pointing upward. Right here, the Kijun is pointing upward. So meaning to say, in this area, it is really a very strong momentum, right? As the market move up, because we have two, pullbacks. I'm going to remove Ichimoku. We can see this one is as it moves up. This is a pullback, move up, pull back, move up, pull back, move up, deeper pullback. So this one is a, we can say this is a 1, 2, 3. These are all deeper pullbacks, right? Up to here. So what is the analogy or the psychology of the market participants in this location? The market analogy of the participants of this location, as the market went up, the bears tried to counter the strong momentum of the bulls, but they are being defeated right here. It moves up, and then they are giving way right here, and they try to build a force right here, try to break this level, but they were unsuccessful. So what happened? When the market or the bears can see it here that there's a failure, let's investigate this area. And you can see there is a pressure, right? We can see this area as a buying pressure zone. We can see it as zone. Why? You can see here wicks, wicks, wicks. So meaning to say, these are all failed breakout in this location. Failed breakout, failed breakout. So we will further investigate this on H4. You can see on H4 that the bear were trying hard to push the market down. But when they reached this portion, the market was, the bears is giving its way, right? As we can see here, we can see a pattern. What pattern that we can see? There's a dragon. There's a doji here. You can see this is a belt hold. This area is a belt hold candlestick pattern. So in this location, actually, we can make an entry, a buy stop order right here, as we can see this, because we can see that the market was able to have a trend bar right here, but there is what we call as a harami, right? There is a small baby. With a ramp, let me remove the separator, and plus there is a doji. So in this location, with candlestick pattern analysis, therefore we can say that this location is a very good area to enter a trade. Plus, it is a good level of support from here going right here. Doji. So as a whole, we can call this as morning star. So how to attack this one? You can have your sell buy stop here. and your SL here. Target. The target will be in this location. That's your first target, right? Because you can see here that this is on top of the corrective structure. That's the first target in H4. But as the market went up, went up, went up, we can see here a basic pivot. So meaning to say, it's saying as, right? But it become a tested pivot from here. Tested pivot. And it was able to break through this area. As it moves up, it becomes again a zone. But we can see it here that this zone, a congestion zone, as it moves, as it tried to test this area, 1, 2, test. So it's a tested pivot. Here, testing again this area. And we can see here a good candlestick pattern. So we can call this as engulfing bar right here. And we can see wicks below. So in this location, it's a good entry for buy. So we can have a buy here. I'll make it red. And then stop loss over here. And then as you can see it here, the market really is very strong as it moves up. You can see it here. Moves up, moves up. So actually, we can make a trend line right here. That's a trend line. Plus, we can have our moving average. You can see that our moving average was not violated until to this location. This location, this is basic pivot, and you can see that the swing high was violated. You can see that the distance from here is strong. There was no much overlap. This is the only this is a basic pivot actually. This is basic, this is basic, and in this location the market, you can see that the market was decelerating. So we can see candles right here engulfing with what you can see, engulfing bar, then try to move down, then try to strike up. So it becomes a double top tweezer in this location, double top tweezer, and we can see this as a double top. And after this one, we can see a spinning candle. After a spinning candle, we can see a good violation to the moving average. So in this location, we can therefore say that we can do like counter trading right here. But as the market went to the right side, it was not really able to break this location. And we can see many many candlestick pattern right here. So in this location, we'll be buying the market buy low and sell high. So in daily, we can see this as a pullback to the moving average. So pullback to moving average, go to H4. There's a piercing line over here. And as a whole, it become a morning star with a piercing line. So this is a good entry. You can make an entry right here for long. Stop loss here. This location, this is what we call as, this is also a candlestick formation. It's almost the same with the piercing line, but the market was very strong and it ended up right here, meaning to say that the conviction of the buyer in this location is strong up. So this candlestick pattern is a good entry also for entering whenever you can see this candlestick like this formation. It's a variation of piercing bar, but it was not able to move really above 50% of the previous bar. So this is a variation. So you can attack this area as well for buy entry. As the market went up, you can see here dark cloud cover. Actually, you can enter as well here for short in this location. Short, you can short that up to this level. And in this location, this is really a good entry location because of the candlestick. We can see this as, this is a piercing candle, piercing line pattern of the candlestick pattern. And then after it pierced down, the candle end up here, it closed here, then made a strong candle up. So actually in this location, you can see it here that the market was able to break the moving average. It pulled back. So this is a good entry for buy entry location. As the market moves up, you can see it is decelerating this location. Try to move up, but it was being rejected. Here you can see here a shooting star. So therefore I can see that this market right now is in each four is it is a ranging market cycle. So in this location, there is a tendency of the market that it can go up or move down, right? If it can break through here and candlestick pattern will be formed right here, you can buy that one. And if the candlestick pattern will form below here, you can buy that one. Plus, we can confirm the momentum of the market by looking at the ADX. Let's try with our ADX indicator, directional movement indicator. You can see that one. In this location, you can see here that the market is really developing its momentum until right here. Market is, the ADX is telling us that it's slowing down. You can see that one. And you can see it here that the market is really in ranging market cycle. And right here, ranging. You can see it here ranging as well. You can see this DMX negative has pointed upward or angled upward. And if you're going to examine in this location, the bear was able to move a little bit stronger for 6 to 8 pips. But as the DMA, the DM negative changes its angle and it moves up. So meaning to say, this area is, if this green color in the directional system will be pointing upward, will be moving upward, and it will move up to here. So there's a tendency that this um, setup of the NCD USD will be pointing upward. But we have to look with, we have to analyze the market with many consideration. We will really do not do it in a short way of analysis. So we will consider as well using ADX on how to attack the market. But in this location, there is no clear direction yet. So we have to wait until the market can violate this area, and we'll try to push down here. And once this area will have a candlestick pattern that will be forming and pointing up, so we can make an entry order right here. Or if the market will have a good candlestick pattern right here, as well our ADX is telling us the red line in ADX or the DM negative is pointing upward. So we can hold until the ADX will go up and take profit when it changes its direction or its angle going downward. So ADX is a very useful tool also on how to enter the market. All right, I'm going to erase everything. But before I will be ending my webinar today, let's look for common patterns like engulfing bar, morning star, and what else? Evening star, the hammer, the shooting star, the piercing line, dark cloud cover, and we will try to look what are the candlestick that we can see right here formation, because those are very important candlestick pattern. Right here we can see, I can see it here. So we will be looking for the evening star, so that we'll not be confused. So in this location we can see evening star, but this is, we call this as evening star cross. Why? Because the second candle is a doji. So it tells us that there's an impending reversal of the market. As you can see it here, the market has reversed. Although you can see here a shooting star, but it didn't work out. It moves down, but was not able to capitalize in this location. You can see the trend line was not broken. So once you will be tempted to enter right here, because this is a counter trading right here, it's not really a good location to enter a trade. So you better look for a long entry up to that location, up to that resistance. You can see it right here. That's the resistance. That's the zone, that location. And as you can see it here, in Western pattern, it becomes what? Head and shoulder. 1, 2, head and shoulder, right? And then you can see here dumpling. dumpling candlestick pattern. See here, there's a window. So this is a good location also to enter a trade. It moves down. Right here, we can see here dark cloud cover, then 1, 2, 3, 3 crows, then we tested the pattern, and it forms another one here. We can see here dark cloud cover, and then a cross, then a hangman. So what does that mean? So this level is very important to watch out. You can see the hangman, it was being tested right here. Probably this area, there is a news location. So first we have morning star, we have dark cloud cover, we have the 3 crows. Then right here we have a spinning bar. So meaning to say, this area was the area where there is a strong movement of, or there is a news that was being released. Imagine 442 pips movement for that day only. And then after that one, you can see here another pattern. There's a cross. It engulfs the close of the bar. So engulfing bar with a cross. There's a shooting star. So this is also a good entry to sell. And right here, you can see shooting star again. So it tells us that the market will be going down. And right here, we can see, can you see that one? Inverted hammer. So in inverted hammer, it tells us something. And this is the whole range. It tells us something that there's an impending reversal of the market. See that one? Inverted hammer. It signaled us for a buy entry. And after that one, the market went up. There's an engulfing bar right here. So it's a good entry for long. And then there's a morning star. You can see that morning star. Good entry for long. Then we can see here engulfing bar. Good entry for long. And we can see here upside down. It's an upside. 3 crows. 2 crows. 1, 2. So this is a good entry. This candlestick pattern is telling us that this is good entry for long entry. Here we can see here a spinning angle, then a doji. After a doji, so this is a congestion. 1, 2, variation, engulf. So we can see here 1, 2, 3 inside bar. It was not broken up. Plus the belt hold. So this location actually we can see this belt hold candle. So this is a good entry for long. So you can enter here up to here. But the thing is, you have 126 pips of stop loss. So if for me, I would rather buy it here because this area is signaling. So 1 pip above the 2G and stop loss lower here. And in this location as well, we can see here that this is a strong resistance zone that was broken and pulled back, basic pivot. So meaning to say that the market is a strong bias to go up. So here we can see here what formation. Shooting star, right? So we can actually enter here, but for 76 pips. But we will always remember that This is a strong support right here. We can see here. Okay, one, two, three, three river, one, two. So triple bottom, one, two, three. So good entry. Engulfing bars, belt hold. See here. So there is a strong buying pressure. So that's the zone for buying. So never really look for selling right here unless if this zone will be broken. So for me, you can look for a buy here. So those are the things that I can see here. Doji meant to say the the bulls here is weakening. The bears was able to try to break out, but you can see that failure. Failure. We can see this as a trend bar failure. When up, then you can see in daily that it forms like a morning star. But the thing is, this location of the morning star, it's not really good because it's on top. So in this area, I would wait until we can see here candlestick pattern that will be forming here after the breakout, probably breakout pullback. Then if I can see here a candlestick pattern that will form here, either morning star, engulfing bar, or pursing line. So probably I will buy here up to that level. How many pips? 112 pips. If it will happen on Monday. But if it cannot break through that location, so probably I'll be selling here. And there is a good pattern of the candlestick pattern, either a dark cloud cover or a shooting star or three crows or upside, upside two crows. So probably I'll be selling in this location. So this is the direction right now. It's not really certain because um, in this location, the market is stalling. And although we can see it here that there was an impulsive move, but this could be a trap because as a whole, this is a corrective structure. So there's a tendency actually that the market, once it can break this location, it can move upward up to that location. Or even, let me check on weekly. Yeah, that's a good resistance location, even in weekly, because we can see it here. This is a congestion zone. This is a good support and resistance. You can see it here that the market reacted. So we will watch out. So most probably there's a tendency that the market can still move up to this location, but depending on the momentum that we can see and with the market, with the candlestick formation as well. So thank you so much for uh, following my Sunday webinar, and I hope you can get lessons from this. That I have to remind everybody that when we do trading, we have really to always follow the rules of risk management. 2% per trade. If you have 4 trades, so the total risk for the 4 trades, it should be always in 3% or 2% or 1% even to protect your account being blown out. Or you can apply the 6 rules. We call that as the 6 rules when your losses in the whole month is the total losses is 6% from your capital. Then you are going to stop trading, then begin on the next month. You have to check your performance. Probably there's a problem with your trading psychology or with your market analysis. So thank you so much, and I hope that everything will be enjoying in the coming weeks, and will be profiting more. We'll be squeezing more pips as the market will be having an activity on next week. So we have really to master everything with trading psychology, market analysis, and risk management. So it should be we should master the three pillars in trading. If we have a problem with our trading psychology and we master our market analysis, then we cannot be a successful trader. So we need the three pillars to be perfectly um, perfect in a level of in a perfect level of skills: risk management, market analysis, and trading psychology. All right. So happy Sunday, everybody. And I'm glad that you're following my Sunday webinar. And thank you so much. I look for more ways that I can also improve the way I present, so that it will be more understanding to your end. So next time, as time will go on, um, I I will improve also with the way I will present value so that you can grasp the points that I'm trying to convey to everybody in our group. So thank you so much and goodbye.